What's going on, guys? Bang, bang. In the month of January, Bitcoin was up over 40%. This is one of the hottest starts to a year since 2013. Many of you may be asking, why is Bitcoin rallying so hard, especially when inflation is still sticky and high, and the Federal Reserve remains committed to draining liquidity out of the market? Well, I'm going to give you a quick crash course in central banks' ability to pump liquidity in and take it out of markets. If we look over the last 60 days, the top 10 central banks around the world have increased their balance sheet size by $653 billion combined. That is a massive amount of liquidity that's getting pumped into the system. Now, it's interesting because the Federal Reserve has drained about $150 billion of liquidity, and the ECB has drained about $430 billion of liquidity at the same exact time. The Federal Reserve and the ECB are taking liquidity out of the market, but still, there's been a net gain of $653 billion over the last 60 days around the world. This is coming mainly because China has pumped about $500 billion of liquidity into the market. Anytime that you see the top 10 central banks adding tons of liquidity to the market like this, you can bet that stocks, Bitcoin, and other types of assets are rallying hard. Yes, the Federal Reserve remains committed, and they continue to hike interest rates as they did this week. But ultimately, they are being diluted by so much liquidity entering the market from other central banks. As we see Bitcoin going up 40% to start the year, I'd like to argue that it has something to do with risk on, risk off, or maybe that it has something to do with the debt limit. And there probably is some truth to that story. But really, when you look at the top 10 central banks around the world increasing their balance sheet size by $653 billion in a 60-day period, of course, that money's got to go somewhere. And Bitcoin has been a big winner and a big recipient of all that cash. Now, what we need to pay attention to over the next couple of weeks is, will that liquidity surge continue? Or have the central banks put so much liquidity, hundreds of billions of dollars, into the market, and they're going to run out? If you listen to someone like Gordon Johnson on Twitter, he thinks that all of that liquidity has pretty much been used up, and now China and other central banks are going to cool off for a little bit. Your guess is as good as mine. But what I do know is that central banks, they're basically like the Geppetto of financial markets. They simply sit there as puppeteers, pulling the strings of different asset prices and making markets dance. They do this by adding liquidity or taking it away. So continue to watch. What is the balance sheet change for the top 10 central banks? If you see those numbers going positive and lots of liquidity entering the market, you can pretty much bet that Bitcoin will be a beneficiary of that. But if you see them draining liquidity and the Federal Reserve, ECB, and other central banks winning out and doing what they're intending to do, well, that's what happened last year. Almost $2 trillion was drained from the market, and we saw all asset prices across the board crash. The central banks are in control. The old adage, don't fight the Fed, is as true as ever. And Bitcoin is hanging in the balance. So keep watching those central bank balance sheets, and I'll see you guys next week.